Okay, gold, 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 gold. I don't know when last we looked at a monthly chart, but this is almost like too good to be true. It's as obvious as it'll ever get. So let's have a look at what we've got here. Obviously, over the past few months, I don't know how many months this is, so we can look at it from an intra-year perspective. An intra-year perspective, we are bearish, right? No doubt about that. Now, let's forget about what we have here, because you can see by all these bearish candles over the past few months, we bearish, selling pressure, sellers in full control here. But let's zone into what we have like at within this monthly candle and looking at the previous monthly candle. So first of all, the previous monthly candle closed bearish, and we've got quite a wick to the downside, right? So that wick to the downside does not occur within a premium low of the critical support, which means if we dissect that further, we've still got room below that wick low to extend into our critical support, okay? Which means we can look at the confluence factor of a wick fill with momentum, because this wick occurs in the middle of a critical range. So that's the first thing. Second thing, the current monthly candle, yes, it's bullish at this point, but what is the date today? The date is the 9th of October. So we're 9 days into the month. We got another sort of just over 2.5 weeks left of movement. With the current, how the current monthly candle is formed is it has opened on the 1st of October and it has pushed straight up, creating a liquidity wick to the upside. That liquidity wick has obviously occurred at a key area on the weekly time frame, which we'll break down next. But looking at that, with the momentum that we have, the current monthly candle needs to potentially flip bearish to create the bottom side to the candle, to continue with this momentum, fill the wick, and push slightly further into this next critical support. So saying that, looking at that, and that's just there so that we understand where price is on the higher time frame, so that we have this idea through, for over the longer term. But it's not something we're going to execute purely based off of, right? Because we are intraday, intra-session traders. So with that being said, just understanding the monthly candle, how it's opened, how it could potentially, how price could potentially move throughout the rest of the month to give us a favorable monthly candle formation. Moving to the weekly time frame, we'll then obviously see that retest that we've had of that critical zone. So looking at this, once again, you'll see this critical support was broken. We saw price sell off. We had the immediate break and retest to push, and we're now revisiting. So looking at this, we've broken, we've found support, we've pulled back into the critical resistance to potentially continue into equal lows. That next leg in that higher time frame market structure will then give us that bottom side on the monthly candle. But like I said, that's just an idea that we have. We cannot marry the bias. We cannot hold on to the bias, and we can't just blindly sell based on that idea, because price does not need to do that. And for all we know, the current monthly candle could potentially close bullish, engulf to shift the trend. Okay, so with that being said, we cannot hold on to that. But now moving down to that intraday perspective, just quickly going back to the weekly, we understand that price has retested this level, so we can start looking for bearish continuation. Moving to the daily, once again, like pound, we've had bearish momentum, intraday bearish momentum, intra-week bearish momentum for the past 3 days, obviously the second half of last week. And looking at Friday's daily candle, we've closed strong bearish. So looking at that, the strong bearish close has obviously managed to get below a key area on the daily time frame, being this level over there. You'll see how that level, if we bring it all the way through, it holds as a key area here, which we can obviously extend and we can refine based on the lower timeframes, but that will become clearer as we drop down. Now, moving to the, well, so essentially what we're wanting to see on the new daily candle is the new daily candle to open, to push up, to create liquidity wick, to flip bearish, to continue selling with the momentum, the intra-week, intraday momentum that we've got. Moving to the 4 hour, this is where we start refining zones. Now, if we have a look at what we have here, and once again, it does not surprise me that we had this consolidation. Let's tie the points down, or the points to the various points together. So recall where we were on the weekly time frame. Price was revisiting a critical resistance zone, fresh resistance zone on the weekly time frame. Okay, cool. Where was price trading ahead of NFP at a massive resistance zone? What happened on Friday? NFP. What happened? Price started selling off. Isn't that a coincidence that such a major fundamental is released when price is trading in such a key area ahead of such a major fundamental? Oh, boom, right? Next level. So, and that always happens. Okay, so it's a pattern. Anyway, what else is there that we've got here? Outside of that external factor, right? We've got a consolidation range on the 4 hour. Where did that consolidation range occur? It occurred at a weekly zone. So what is that? It's order accumulation, right? So let's just quickly go back to the educational side of things, market structure and trends here on the community portal. Bullish market cycle, order accumulation, which occurs at a key area, daily, weekly, for a breakout, a shift into the bearish cycle. Boom. Have a look. This consolidation range on the 4 hour, where does it happen to occur? Oh, only within a weekly resistance. That's all. Only within a weekly resistance, right? So looking at that, we have had the bullish market cycle, a series of higher highs, higher lows. We had order accumulation. We obviously saw the break. We pulled back. Next structural leg, right? Simple break, retest, continue. What happened? Oh, now we're going to get fancy. Double top. Oh, but this second top occurred at a price lower than the first top. Oh, significant. Oh, consolidation range. Yes. Okay. What's happened now? We've broken out of that consolidation. There is the break. Break, retest, continue. So essentially, what have we had here? We've had this consolidation range form. We've had the breakout after the bullish cycle, which takes us to the bearish cycle. Bullish cycle, order accumulation, bearish cycle. What happens? How do we notice what confirms the shift in momentum? What confirms the shift in trend? The break of a fresh higher low in the bullish cycle. Going back to the chart. This here, if we were going to continue bullish, this price level here would have held and served as the fresh higher low, essentially to bounce. But we've now broken it. That is where the shift takes place. So now, if we look at what we could potentially see, right, we could see a retest of this zone there. That is the most recent structural break where price has not yet grabbed liquidity. So that is where we could see a retest. Now, it's not that simple. We need to still look at one last thing. We have a key area that sits over there. Okay, and you would have seen that by the low that was created on Friday. So this here, you'll see how if we drag this zone all the way to the left, price is rejected and has turned there, there, there. We've sold into this level, it holds a support. The next move is for price to open, pull back into that minor zone within this range to push into that low, to get below the low, to then sell off, to retest this most recent structural break over there. So that is what we're looking at, okay? And that is what we could potentially see. Now, that might not happen tomorrow. So what we could see ideally, because we are going into a new week, what needs to happen in terms of higher time frame or favorable higher time frame candle formation is the new weekly candle needs to open. It needs to push up to create a top wick. That top wick will then potentially give us another rejection wick to the upside within this key zone, because we've got our first rejection wick over here. So we need to see the candle open, push up, to then flip bearish and sell off, which then brings me to the point of the daily candle forming tomorrow. The daily candle to open, to push up slightly, which will then give us will lead to price creating the top wick on the new weekly candle, to then continue bearish, sell off into that low to break the low and push through the range. Make sense? So with that being said, we are definitely not looking for buys, okay? At this point, we are not looking for buys, given that the weekly candle of last week has closed below our critical resistance. So the only time we will start looking for buys is the community members, you guys will know, we will start looking at potential buys back above this area here around 1707, 1710. So this zone here, which is also slightly more aggressive. However, if not, we'll then look at buys above 1720, which was the level that we were looking at last week, if you go back to Discord. Okay, but essentially we're looking for a break of that low. Now, like I said, because we are pre-market open, right, a lot can happen during Asian session. So if price happens to push into this area and create another low or a new low, come New York, we will just monitor a break of the new low that's been created, because essentially this support zone extends this entire wick region. So we can still push down into around 1688, create a new low within 1688 to then break that to push. So it's just a matter of understanding the zone that price is trading in and just waiting for structure in the significant time zones, right? Or session times. Right, so I think that's also pretty straightforward.